The Investor's Mindset, How to Think Like a Pro. Hello everyone and welcome back to the X100% podcast, the show where we dive deep into the art of success, one story at a time. I'm your host, Eddie, and today we're exploring a topic that not only transforms how you view money but also shapes how you approach life itself. The Investor's Mindset, How to Think Like a Pro. Imagine standing at the edge of a vast, unpredictable ocean. The waves represent the market's ups and downs, and your boat is your portfolio. Some days, the sea is calm, and you sail smoothly. Other days, storms of uncertainty and volatility rage, testing your resolve. What makes the difference isn't just the strength of your vessel. It's your mindset, the way you navigate these tumultuous waters. Today, I want to share with you not just strategies, but a philosophy that has guided countless successful investors. In this episode, we're going to journey through the core principles that define a pro investor's mindset. We'll dive into stories from real-life experiences, explore the psychological tools needed to stay calm under pressure, and unearth the wisdom of legendary investors who have mastered the art of long-term success. Let me take you back to the early days of my own investing journey, a time filled with equal parts excitement and anxiety. Picture a young Eddie, fresh out of college, full of dreams and armed with a modest savings account. Like many of you, I was eager to see my money work for me. I plunged into the stock market, only to quickly learn that every rise and fall could stir up a whirlwind of emotions. I remember a particular incident when a sudden market dip left me questioning my decisions. My portfolio, which I had so carefully built with hard-earned money, took a hit, and I felt a sinking feeling of despair. It was in that moment of vulnerability that I discovered the importance of the investor's mindset. I began to read, study, and reflect on the strategies of those who had navigated these waters before me. Investors like Warren Buffett, Benjamin Graham, and Peter Lynch. Their approach was not about chasing every trend, but about understanding the intrinsic value of assets, the importance of patience, and the power of discipline. This was the first lesson. Investing is as much about the heart and mind as it is about numbers and charts. Let's break down the essential components that form the foundation of a pro investor's mindset. These aren't just tips for the market. They're life lessons that can be applied in every aspect of your journey. 1. Discipline over emotion. The market is a roller coaster of emotions. Fear, greed, excitement, and doubt all play a role. But a seasoned investor doesn't let emotions dictate decisions. Instead, they develop a set of guiding principles and adhere to them, regardless of market noise. Practical tip: create a written investment plan. Write down your financial goals, risk tolerance, and strategy. When emotions run high, refer back to this plan to stay grounded. 2. The virtue of patience. Investing is not a sprint, it's a marathon. Just as a tree takes years to grow from a seed into a towering oak, your investments need time to mature and bear fruit. Practical tip: think in terms of decades rather than days. When you see short-term volatility, remind yourself that true value is built over time. 3. Informed decision-making. A pro investor is an avid student of the markets. They commit to continuous learning, always seeking reliable data and insights to inform their decisions. Practical tip: dedicate time each week to reading financial news, studying market trends, and revisiting your investment strategy. 4. Resilience and adaptability. Every investor will face setbacks. What distinguishes the successful ones is not the absence of failure but the ability to learn, adapt, and come back stronger. Practical tip: keep a journal of your investment decisions. Analyze what went right and what went wrong. Use these reflections as stepping stones for future strategies. 5. Strategic risk management. Understanding risk is at the heart of investing. Pro investors don't shy away from risk. They manage it with calculated precision. Practical tip: diversify your portfolio. By spreading investments across different asset classes, you reduce the impact of any single market downturn. Let's expand on these ideas with some vivid stories and examples that illustrate the power of a pro mindset. Story of Alex, the reluctant investor turned disciplined strategist. Meet Alex, a young professional much like many of us, eager to make his mark but uncertain of where to start. Alex initially dived into investing with a scattergun approach, buying stocks based on fleeting tips and market fads. His early experiences were a mix of small victories and heart-wrenching losses. Every market dip was a personal setback, and every surge was celebrated with unbridled enthusiasm. One day, after a particularly harsh downturn, Alex sat down with a mentor who introduced him to the concept of strategic investing. He learned about the importance of fundamental analysis, the beauty of compounding, and the power of long-term vision. Over time, Alex transformed his approach. He set clear, measurable goals. He developed a detailed investment plan. He learned to ignore the market noise and focus on the intrinsic value of his investments. Today, Alex is not just a successful investor. He's a mentor to others, embodying the pro mindset of discipline, patience, and continuous learning. Case study: the wisdom of Warren Buffett. Warren Buffett's journey is perhaps the most celebrated example of the investor's mindset. Buffett's strategy has always been rooted in value investing, a philosophy that emphasizes buying undervalued assets and holding them for the long haul. Despite market fluctuations and economic crises, Buffett's disciplined approach has led him to become one of the richest individuals in the world. Key takeaways from Buffett's approach include: 1. Long-term perspective. Buffett famously quipped, "Our favorite holding period is forever." This reinforces the importance of a long-term outlook. 2. Risk management. By investing in what he understands and maintaining a margin of safety, Buffett minimizes risks. 3. Continuous learning. Despite decades of success, Buffett remains an avid reader and student of the market, always seeking to improve his understanding. These principles are not just theoretical, they have practical, transformative impacts on every investor who adopts them. The psychological battle. Mastering your emotions. Investing isn't just about financial acumen, it's a psychological game. The emotional highs and lows can be as challenging as any market trend. Here are some psychological strategies to keep your mind in check. 1. Mindfulness and meditation. These practices can help you remain calm and focused during turbulent times. 2. Detachment. Learn to view market fluctuations as natural phenomena rather than personal failures. 3. Routine reflection. Regularly evaluate your emotional responses to market events. Over time, you'll notice patterns and learn how to manage your reactions better. Now that we've explored the philosophy and stories behind the investor's mindset, let's talk about actionable tools and techniques that can help you cultivate this mindset in your daily life. 1. Education and continuous learning. Invest in your education by reading timeless classics such as The Intelligent Investor by Benjamin Graham or Common Stocks and Uncommon Profits by Philip Fisher. Many online courses also offer insights into market strategies and risk management. Stay updated with the latest market trends and expert opinions through industry podcasts and webinars. Make learning a daily habit. 2. Developing a robust investment plan. Set clear goals. Whether it's saving for retirement, buying a home, or funding a passion project, clear goals will guide your investment strategy. Create a budget, understand your income, expenses, and the amount you can allocate to investments without jeopardizing your financial stability. Regular reviews. Schedule regular reviews of your portfolio. Adjust your strategy based on market conditions and personal milestones. 3. Leveraging technology. In today's digital age, technology is a powerful ally for investors. Financial apps. Use budgeting and investment tracking apps to monitor your portfolio in real time. Data analytics. Leverage online tools that provide market analytics and forecasts. These insights can help you make more informed decisions. Virtual communities. Join online forums and communities where investors share insights, experiences, and advice. Learning from others can accelerate your journey. Even with the best intentions, many investors fall prey to common pitfalls. Let's address some of these misconceptions and how to avoid them. Myth 1. I need to beat the market every day. The truth is, successful investing isn't about daily wins. It's about making smart decisions and letting them compound over time. Constantly trying to outsmart the market can lead to unnecessary stress and impulsive decisions. Myth 2. High risk equals high reward. While taking calculated risks can lead to high rewards, it's crucial to understand that high risk without proper management can lead to significant losses. It's not about avoiding risk entirely, but about managing it intelligently. Myth 3. Past performance guarantees future success. Even the best strategies need to evolve. Markets change, economic conditions shift, and what worked yesterday might not work tomorrow. A pro investor stays adaptable and continuously refines their approach. Integrating the investor's mindset into your daily routine can be a transformative experience. Here are some practical habits you can adopt. 1. Morning routine. Start your day by reviewing your investment news and setting a clear intention for the day. Whether it's a quick scan of market headlines or a deeper dive into a research report, Make it part of your daily ritual. 2. Journaling. Keep a daily or weekly journal of your investment decisions, emotions, and outcomes. Over time, this habit will help you identify patterns and refine your strategies. 3. Regular reflection. Set aside time at the end of each month to assess your progress, celebrate your wins, and learn from your setbacks. 4. Networking. Build relationships with other investors. Share your experiences and learn from theirs. Sometimes, a fresh perspective can unlock new insights. Now, let's expand our horizon beyond just the numbers and charts. The investor's mindset is not confined to the world of finance. It's a way of life that can enrich every facet of your existence. Here's how. Personal growth and resilience. The discipline and patience you cultivate as an investor can spill over into other areas of your life. Whether you're pursuing a new career, starting a business, or simply navigating the ups and downs of daily life, the ability to remain calm under pressure and focus on long-term goals is invaluable. Financial freedom as a catalyst. A well-developed investor's mindset doesn't just aim for wealth. It aims for freedom. The freedom to make choices based on passion rather than necessity, the freedom to pursue your dreams without financial constraints, and the freedom to leave a legacy that inspires future generations. Legacy and mentorship. As you grow and succeed, consider the impact you can have on others. Just as I learned from mentors in my early days, you too can share your knowledge and experiences. Mentorship is a powerful tool. By guiding others, you reinforce your own learning and contribute to a community of thoughtful, resilient investors. As we approach the end of today's extensive journey, I want to leave you with one final thought. The path to becoming a pro investor is a continuous journey, a blend of learning, adapting, and growing. Every market dip, every moment of uncertainty, is an invitation to refine your approach and fortify your mindset. Think of your investment journey as a lifelong expedition. Each chapter, whether marked by triumphs or setbacks, contributes to your overall wisdom. The habits you nurture today will lay the groundwork for not just financial success, but for a richer, more resilient life. So here's my call to action. 1. Embrace learning. Make it your mission to seek knowledge every day. 2. Practice discipline. Stick to your plan even when the market gets turbulent. 3. Stay patient. Remember that real success takes time to build. 4. Cultivate resilience. Learn from every mistake and keep moving forward. Before we wrap up, let's quickly recap what you've learned today. 1. Discipline and patience. The core of the investor's mindset lies in managing your emotions and maintaining a long-term vision. 2. Continuous learning. Whether through books, podcasts, or mentorship, constant education is vital. 3. Risk management. Diversification, strategic planning, and emotional resilience are your best tools against market volatility. 4. Holistic growth. The principles of smart investing extend beyond finance, fostering personal growth, resilience, and the freedom to live your dreams. Thank you for joining me on this in-depth exploration of the investor's mindset, how to think like a pro. I hope today's episode has provided you with not only actionable strategies, but also the inspiration to look beyond the immediate fluctuations of the market. Embrace each challenge as an opportunity to grow and transform your financial future. Remember, every decision you make is a step toward becoming not just a better investor, but a wiser, more resilient individual. Keep refining your strategy, stay informed, and most importantly, believe in your long-term vision. Until next time, this is Eddie, signing off from the X100% podcast. Stay curious, stay disciplined, and happy investing.